Alrighty, traders, well, welcome to the investment draft this week, the weekly investment draft this week. We're going to be talking about a bunch of things with Chris and Tyson, and we're also going to go ahead and cover stocks, cryptos, and we are going to jump into Forex. So we're going to jump into all three of them, but remember, traders, there's a lot of news coming out this week. We've got rate decisions coming out for the New Zealand, for the Aussie. We've got jobs coming out for the Canadians as well as the US on Friday. So a whole bunch of a lot of stuff that we're going to be talking about in today's session. So welcome to the session. Before we get started, I want to make sure that everyone goes ahead and smashes the like button. Let's go ahead and start with that. Smash the like button, but also subscribe to this channel. If you want to get more content like this and know when we go live, go ahead and make sure that you go ahead and subscribe to the channel, because this is how we're going to be able to get you, or at least notify you when we go live. So with that being said, let's go ahead and bring in the panel. And it's going to be Chris and Tyson as we go ahead. Oops, there we go. Chris and Tyson. Chris, Tyson, how you guys doing this beautiful Monday morning? And I know you're loving it, Tyson, because you're in Florida.
I am loving it. What a phenomenal weekend weather-wise. Spent some time at Disney.
How's that 50th anniversary?
You know, it was kind of crazy. It wasn't actually that crazy on Sunday. Saturday, I guess, was nuts. Sunday, it was kind of shocking. It was like a 15-minute wait for Space Mountain, which is actually really not
nothing
bad at all. So,
was that a fast pass required for a 15-minute wait, or not even?
No, it was crazy. There was a lot of people in the streets, but you know, I don't know if people were just buying souvenirs and just hanging out and stuff. But no, it was good.
Very nice.
That's good, fantastic. Well, we got a lot to talk about today with stocks, options, stocks, cryptos, as well as Forex. I'm going to jump straight in. We normally start off with stocks, but let's jump into Forex right now, because there's a lot of news coming out this week, Chris. As we mentioned earlier on, we got the jobs coming out at the end of the week for both the US and for Canada. We've got rate decision coming out on this evening for the Aussies, and then New Zealand out tomorrow. And there's a bit of a controversy of whether or not we are going to see a rate hike with the New Zealand tomorrow. And that depends on, of course, what the Aussies do this evening. What is your take on that, Chris?
Yeah, so, I mean, there was essentially a balk last time. I was looking at the Forex Factory calendar this morning, and the RBA is expected to keep things the same. The RBA has been the slightly more like neutral to dovish central bank of that area. Looking at essentially keeping rates unchanged for the next probably year or two, maybe 2023. But the RBNZ was already talking about raising rates, and then COVID kind of squashed that a little bit ago with the Delta variant, where they were supposed to raise rates back in August, where they were expected to go to 0.50, and they came in at 0.25. So here we are again. Now it's October. Are we going to see a rate hike? You know, what's interesting, though, is, you know, this is what I was asking you guys before we started the live session. Is the RBNZ rate hike actually priced in? And Gary, you said no, but going into that August rate decision, a lot of it was priced in. I mean, we were starting to see like the month leading up, like, you know, early August into the rate decision in August, the New Zealand dollar was one of the strongest currency pairs of the month. So, I mean, in a way, I think like maybe it's willing to revisit some highs and lows, but I don't necessarily think that the RBNZ, you know, is going to shock the market with anything that is not expected. So I think they'll still raise rates. That would be, you know, a big deal, obviously, in this environment where nobody's raising rates. But at the same time, if they do raise rates, will that also force the hand of the RBA? I know, Gary, you've said before that you think the RBA leads and the RBNZ follows. But in this instance, I think the RBNZ's taken their plan, and they're going to raise rates to 0.5. And then we'll see if the RBA flinches and maybe jumps it up to like 0.25 and starts to kind of chase up a little bit. So I think, again, if you want to see how the fireworks pan out, then, you know, watch Aussie dollar, watch New Zealand dollar, watch Aussie New Zealand. That'll be good crosses to watch in Forex this week to see, you know, which currency pair gets the upper hand.
Yeah, and I somewhat agree with you. But Tyson, you were speaking about the Aussie CAD position that you're in at the moment right now. How does that change how does that influence your decision based on the fact that we've got news coming out today this evening for the Aussies, and they're keeping the rates unchanged?
Yeah, it's actually it doesn't really change the stance that I have. I'm bullish on the Aussie CAD. It actually makes me want to look at the New Zealand CAD more, because I'm looking at, so I'm going to lean on the technicals. I agree with everything that you guys said fundamentally. I do think that New Zealand's going to lead this time. I think that they are going to raise, and there's going to be maybe a little bit of a follow-up with Aussie. And but with that being said, technically speaking, based upon the money flow this month, the Aussie New Zealand it's not in a confirmed money flow, but it's not in a forecasted reversal, which is kind of a consecutive money flow pattern, but it is in a money flow pattern bearish coming into this month, which means I'm looking for a sell-off in the Aussie versus the New Zealand. I think we're sitting at levels of potential supply. Now, with that being said, we were talking right before this session, I see a push down towards 101 to 100, and I think that could be a multi-year buy level. Yep. I think that could be an absolute phenomenon. So I don't think this is a move that's going to last forever, but I think we're going to see a flush down towards 101, 100. Those are going to be awesome buy levels, but I am looking for weakness throughout this month. So think about this. So I am long the Aussie CAD. However, I see the Aussie New Zealand falling. That leads me to the New Zealand CAD, which I actually haven't pulled up in a little while. So I'm interested in actually looking at strength in the New Zealand CAD. And what's interesting as I look at this and I see the New Zealand CAD sitting right around this, at this 87 to 87.50 level, I think that's probably a little bit of that's a really nice level that I think we could start to rally from, depending on what happens this week. So I'm gonna actually look at the New Zealand CAD throughout the week and try to pick my shots there, because I like the Aussie CAD. But if I like the Aussie CAD, then I better like the New Zealand CAD, if all of that makes sense.
Yeah. I think I like that play, because if you look at the chart right here in New Zealand CAD, I've got multiple positions in on that. But I'm just saying this, that if we're at the support level, forget about the support level. Let's talk about the move that we've had over the last few weeks, right? Or at least, the last couple of weeks. It's been really strong bearish, so there is correction due, right? We're like really oversold right now, looking for some sort of correction move. So if anything, Tyson, I think we should at least get a 3.8 pullback, a 3.82 pullback on this last wave move that we had right here, and that could bring us all the way up to around about 88.46. Well, at least go test that for a correction move. So I like that play. Now, your New Zealand CAD position that you're looking at, Tyson, is that going to be more of a short-term rally, or are you looking for it to rally a lot more higher?
No, based upon what I'm seeing and based upon what the monthly money flow is telling me, I think it could be a decent short-term play. I mean, I wouldn't be shocked if this week we don't get a push back up towards 88.50. But I see some decent legs in this. I see, over the course of the next few weeks to next month or so, I think we could push back up towards that 92 level. I think we're going to struggle at 92, but I think a push back up towards that 92 level is in the cards.
Yeah.
Well, fellas, the CAD has, we've got to acknowledge what oil's been doing too. It's like we haven't really seen any substantial turn in oil at all. We're sitting at almost $78 right now. Look, we're at equal highs. I'm looking at the higher time frame. The daily chart's nearly at overbought conditions with the relative strength. We're sitting with slight divergence. If you go to the weekly chart, are we sitting? We're right here with hidden bearish divergence on the weekly chart for oil. I know that we could drift up a little bit higher. We're looking at oil 1, 2, 3, 4, 5, 6, 7 weeks in a row bullish. So, how much higher can oil really stretch just based on this candlestick count? $80 has to be a pretty firm level of resistance, in my opinion. And so again, we're looking at, just a great flush, like Euro CAD dropped straight down, Pound CAD dropped straight down, Aussie CAD is still at the lows, New Zealand CAD dropped straight down, CAD Swiss went up. I see a good play for the CAD basket to get a little bit softer. New Zealand CAD, I love that trade. And it's like if oil, starts to top out now or starts to give us some confirmation at $80 highs and starts to flush back down, then I think the CAD is going to be a great trade for us to be, short on the CAD basket.
Yeah. So what do you guys think of that? I think what you just said is really key, Chris. Maybe don't even trip over the details of it. Look at the whole entire weakness on the CAD basket and just kind of, do the shotgun approach and, go long dollar CAD, long pound CAD, long Euro CAD. And obviously some of those might pay off more than others, but you're kind of spreading your risk also.
Mm-hmm. I like that a lot, actually.
Yeah. I wanted to bring you into that one there, Chris, because in my trading room, we did speak about U.S. oil, and we did say U.S. oil is getting a little bit of a spike on over that resistance. Mm-hmm. But if I get a little spike and a pullback, and then price closes back below that resistance, or I get a nice little bearish engulfing, any sort of bearish candlestick formation forming right there below, it's a good sell to start looking at all the other crosses against the Canadian dollar and trade that off, because that's probably going to be our best bet for this next couple of months or couple of weeks. Sorry, is watching
So did you say
US oil.
you're looking for that potential? So you're looking for potential continuation push higher, maybe?
No.
Oh, okay.
I'm
sorry, I missed.
He's looking short too.
Got it.
Yeah, I'm looking for US oil to turn around and head back down south, because
Okay.
I've been targeting 61.57 if we hold above that, and so I don't think we're going to break above that.
The reason I ask that is this: doesn't it seem like everybody thinks oil's getting toppy? That's one of my concerns.
Yeah.
When everybody's thinking something's going to happen, oftentimes the opposite happens.
But today seems to be one of those days, Tyson. Today seems to be one of those days where it's like, I've been thinking toppy for a while, and you got resistance at 77, and then today it's up to 78. But it's like, if you look at today's candle, it's a big bullish candle on the day. I just 7 weeks in a row, though, it's like, come on, dude. I mean, I don't know how much further we can stretch after having 7 bullish candles in a row on the weekly chart. I just think from that standpoint, the technicals look good. Yeah.
Psychologically, it makes sense too, and a lot of people need to, remember this is psychologically, we're going to get to a point of mercy for whoever's trying to sell it, right? And they're like, okay, I'm done. Or they're going to double up. And then we're also going to get to a point, and this is even more powerful. We're going to get to a point where whoever wanted to buy has bought. They've got a bunch of profits already in. And so we still have a lot of buyers, but do we have a lot of buyers at current price, or do we have a lot of buyers that will say, hey, I want to buy lower? And I believe we're getting to the point where we have a ton of buyers. This is real buying, but they want to buy it at a lower price, which means we're likely to come down first.
Agree.
Yeah.
And Gary, you mentioned like $62. I mean, I'm thinking, it's okay. Let's throw this out there hypothetically. So I think that oil, if we start topping here between $78 and $80, we start breaking back down. I think oil can come back down and revisit $63, $62. Now, the question I have for you, gentlemen, is, are we going to hit $61, $62 and have that be another low to head right back up to $80 and have like this kind of supply and demand range on oil? Or do you think that if we're making new highs like we are now, let's say we peak at $80, $81 and we drop back down, is that a potential head and shoulders or a crown for a top in oil? Because if you go back to
I think it has a lot to do with 2024, what the U.S. does with our oil exploration. There's so much fundamentally. Yeah. So what you're talking about, I think, is long term. We're either going to go to 150 if we stay in the current regime, current, like inflationary environment, stuff like that. I think we're going to 150 or 200. It's going way, way higher. If things change and we open up pipelines again, and we, and depending on the regime and stuff like that in 2021, then I think we're going back down to 20, 25. So, but I like what you're thinking, because it's setting up either. I think what you're saying is we're setting up, I think in this area, we're going to base around this 60 to 80 level for a while. And we're either setting up for a double to the upside or a cut in half to the downside. But we're not going to stay here I think we're going to stay here. I think we're going to base in this area for the next probably 5, 6, 7 months until we get a little bit of a clearer picture on what 2024 may look like, what the U.S. policy is going to look like, what infrastructure, how much is actually going to roads and stuff like that. Are these EVs, listen, this EV movement is huge, but is it really viable? You see what I'm saying? Like, there's still questions of viability and stuff like that. So I think all of this is going to play out. I think it's going to be great. I am long-term a perma bear on oil long-term. But that doesn't mean we can't push up to 150 again someday. So I don't know. It's interesting. So to answer your question, I don't even know, Chris. I see it long-term bearish, but it's such a clouded chart.
Or
let's go to what we can say we know, right? And that is technicals, because you're right. The fundamentals, what the US does, what they don't do, it's all confusing. It's all like a blur right now. But what we can say is we can always follow the technicals, and what the technicals tell us is what price should be doing based on the patterns that are forming, and we can only follow that. And if the market breaks out of these patterns, then we look at the alternative. So that's always the backup, alternative. But if we go to the charts right here, Chris, and to answer your question here, if you look at the chart right here, it gets very confusing. But when you put some details in here that makes a little bit more sense on what's going on, this is what I'm seeing. I'm seeing price moving into a wave 1, price moving to wave 2, price move to wave 3, price move to wave 4, price move to wave 5. So now we're topping up, we're creating these double tops here, possibly. If price breaks through that, we're going to be chasing after what happens when we complete a fifth wave. Price chases after the fourth wave low. That's it there, 57. Right. That's why I'm saying 57 is going to come into play, because price is going to start working its way back down towards 57. Now, when it gets there, then go into what Tyson was saying. Yeah, then we're on an upside rally. Then we can see price going up much higher up, and we could probably see price going up. Well, I'll have to go ahead and put in total fibs. Yeah, I don't know about 150, but if you go ahead and put in fibs from the lowest point right here, and just go ahead and connect the highest point there. Let's just do this. We're looking at a 1 point. Let me see if I can get it right here. We're looking at a 1.618 there at 125. Now that's not where it's going to stop, because that's going to be the price third wave. So this is going to be wave 1. This is going to be wave 2 right here. Then we're going to look for wave 3 up here at 125. Then we have another correction move, and then price is going to go up to the next level, which 150, which Tyson mentioned right here, is absolutely in the cards. But I think it's going to take some time for us to get there. I think once we get down to $57, I think then we can start thinking about 125, 150 eventually at that point. But I think if we take it in stages and we think 57 right now, think bearish towards 57. Once you get to 57, think bullish to 125. Once we're at 125, look for correction move. After the correction move, look for another rally to 150 plus. So that's what I look at, because if you take all the information, take all the news, take all of what's going on right here, and try and connect it with the technicals, it gets really confusing. But if you just really focus on what the technicals are telling us, and right now we can only follow the technicals. And so I said to the traders this morning, I said, hey guys, if we trade back below, if we trade below this resistance here on the chart, which is at, let's take it 76. If we trade below 76, we're heading down to 57. But there is some upside potential to 79. I think, Chris, you mentioned 79 there for a minute, 79.80. So there is some upside potential to 79.80 before we actually see the turn, because if you look at the internal structure, we've got wave 1, 2, 3, and 4, and now 5 is here at the 127, which is at 79 and change, call it 80. So yeah, that definitely lines up with you guys, what you guys are looking at right here from a short-term and a long-term perspective. Yeah.
Well, I think you're spot on. And I think the one big takeaway on what you just said is that's why I love what we do is we there's a lot of ideas, a lot of opinions, and a lot of the stuff we say is based upon our experience and education and what we know and all this kind of stuff. But oil's a perfect example of a manipulated market, and the fundamentals today can change like in an instant. They're talking about cutting production, OPEC, all this kind of stuff. So like you're talking about a massively manipulated market. So fundamentally speaking, can be one thing today and another thing tomorrow. Whereas technicals, listen, you're looking at a lot long-term enough chart on a daily, weekly, monthly. It's not going to change. It changes over prolonged periods of time, but what is happening right now is real. And so we always lean back on price. So I love that.
Yeah.
Gary.
Hey, Chris and Tyson, I want to bring something that we've never spoken about. We have maybe touched on it a little bit, but what about gold and silver? I think gold and silver is at a good, solid buy position right now. Solid support on both gold and silver, and I think there's opportunity on both of them. What do you guys think about gold and silver?
Yeah, yep, silver for me all day. Yep.
We've been talking about it in equities on demands. We've been establishing some positions. We've been actually very, very conservative on it. We actually structured a position, Chris, where I think we were getting long below $19 or something like that on SLV, which is the exchange traded fund for silver. We structured a position. Get this. This is going to sound kind of crazy, but this is what we teach in equities on demand. We try to make money up, down, and sideways. In fact, we don't just try. That's exactly what we do. Every position we put on, we want to make it. It's true. Like we don't ever take a position that's not going to have some type of profit, regardless of what happens. Now we can lose in it if the market goes down, way further than we thought. Then we absolutely can take on a loss. But what we did is we structured a trade when silver was at SLV was at like $21 or $22. We structured a trade that we guarantee ourselves a very small profit. But we guarantee ourselves a profit if prices goes nowhere. If price rallies to the moon, we guarantee ourselves a small profit. Even if price fell down to $19, we still made money. So price could fall almost 10, 15% or whatever it might be. and we still make money. And so it was a super conservative way, but that's my long-winded way of saying we really like silver. And actually, Chris, I think we might be being a little too conservative on silver, to be honest with you.
Yeah, I just did a credit spread this morning. I know that we talked about it in class, and I was like, we're just going to sit tight. But, I've got the income play out to November. I threw a credit spread in. I did the 21 by 2050. I'm in it. I'm going to test the waters this week. I wouldn't mind getting assigned again. But I went further out, Tyson. I did a credit spread for, I did it today, but I put the expiration out to 10/29, so the end of the month. So if we do have that flush down into, I'm looking at SLV. If we flush down to set, $19, $18, I still have that long put that I can cash in. And that would be kind of my insurance, if you will. So that way I can lower the cost even more. But, I really like this, $20 area. As if we stay firm at $20, I could see a nice little jump back to $25, $26. And I've been talking about this. I don't know if it's going to take 3 months or 6 months or a year, but if I'm building a base at 20 and eventually it comes back up to, $26, $27, that's a great return on silver. That's a nice little play. And Tyson, you keep saying it like it's a great place to hide out. If we're not sure what the dollar's going to do, if we're not sure what oil's going to do, we're not sure. If I had to pick between gold and silver, as Gary was asking, silver for me all day. I would take silver technically over gold all day.
Yep. So question for you. If you want to pull up a chart of the SLV, and I've got a question for both of you guys. Would you own SLV silver, the silver ETF, at $17.40?
Absolutely. Absolutely.
Sounds impossible, doesn't it? But here's what we do. Sell, go out to December 31st, sell the $18 put for 22 cents and do the 18 by 1850 bear call spread for 44 cents, 45 cents. And if price is above that, you only make 15 cents. But here's the deal. You still make 1% on the trade. You're still making you don't make much money. Well, it's 1% on almost a risk less trade. Or you own SLV, you own silver. What are we trading at right now? Almost $21. You own silver at $17.40. You own it 17% lower than current price. That is phenomenal. That's the kind of stuff people need to be doing. Again, that's a super conservative way to do it, but that's a way of like, hey, how do I beat the bank, right? How do I beat what the bank's going to pay me? But how do I also, at the same time by beating what the bank's going to pay me, how do I also own something high quality, way lower than current price? That's how I would do it.
Yep, yeah. I like that a lot.
Well, if you look at the technicals on both silver and gold, because to answer your question there, Chris, on your choices on the two, technically, well, silver is sitting in a range. The next upside move is going to be at 29. So you're looking at 26. That's halfway through the range. That should be an absolute easy target. But it is sitting in a nice little range here on the daily. So 29 is the upside target for the range, but we should see further upside potential to around about. Well, I believe this is the first swing since the low. Yep, it is. So if we're looking at silver for a break of 29, we're chasing off to 41.25. That's in silver. If we go ahead and take a look at gold from a technical perspective, let's take a look at gold. Gold's also coming out of this big bullish rally, and we spoke about price going down to around about 16.17, but of course that turned around a little early. We turned around at 16.77, so never hit the 1600 exact. And we saw this wave 1, 2, 3. This is 4. So we're looking for gold to chase after 1981. So I think from that perspective, I think you're right. I think silver is definitely a bigger upside turn now. So let's just talk about silver and gold, right? Gold performs well before recession, heading into recession. Silver performs outstanding during recession. Are you saying that we could possibly be heading into recession?
Oh, I think we're for sure heading to. I think it's almost a.
It's a contraction. Yeah,
and
it's
the
a
reason
contraction.
why is because we're coming off such a high. I think it's going to be the greatest recession ever, and we're going to have a GDP at like 4%. You got to remember, definition of a recession is
2 quarters.
A decline in 2 quarters in a row in the gross domestic product. There's no way we're going to continue to grow at 6-7%. So I think we're going to go through a technical recession with the economy still being maybe awesome. So it's going to be really weird, and it'll be interesting to see how the market handles that. But yeah, I think a recession's almost baked in for over the next year.
Okay, guys,
it's not like a normal recession though. It's a really weird, like a Chinese.
Yeah, it's almost like a productive recession where it's like interest rates might be changing and we still have, people flush with cash and positions, and the stock market might still be inflated, but it's enough to like price in that a correction is nigh, is near.
Typically, when we go through a recession, we go from 2.5% growth down to 0.5% growth, and people are like, "Oh man, things are really slowing down." We're going to go from 6% growth to 4% growth and be in a recession. That's crazy, but that's what's going to happen.
Yeah. Let's swing it to some stocks. Couple of picks, Tyson. Chris,
Man, I'm going to come back. I sound like a broken record, and I have been wrong, but early. I'm going to tell you what I told Equities on Demand students. I've got two favorite stocks right now, two of my largest positions by far, in Skills, SKLZ, and Beachbody, BODY. I'm going to continue to buy them. They've been going down. I've been using this weakness as ways to dollar cost average in. Might be wondering, well, geez, at what point are you going to sell? What point are you going to, admit when you're wrong? Honestly, listen, I'm not married to the position. I will admit that I'm wrong, and I will change my stance. We've done this before in other stocks. I will do that if the story changes. The story still hasn't changed. I like the companies fundamentally. Those are my two favorite longer-term plays. Saying that, I think there's some really, really good shots that you could take. I'm going to tell you right now, I think a stock like Twitter, a stock like Facebook, you want to make some quick bucks over the next 1 to 2 weeks, I think they're due for a nice bounce. I think they're getting beat up for the right reasons, but I think they're going to bounce fairly aggressively. I've got a lot of credit spreads in this week in stocks like Twitter and Moderna and different things like that. But there's another thing we were talking about real fast in Equities on Demand is like we've been looking for the sell-off. There are stocks out there that have sold off down to very valuable levels. For those that want a little bit more conservative portfolio in like blue chip style, amazing multi-tens of billions, hundreds of billions of dollars worth of companies. Two of my favorite plays is Magna, MGA, which is an electric vehicle manufacturer. MGA is the balance sheet is absolutely beautiful. It's amazing looking, a lot of cash. And then Micron, MU. Those two right now are trading at massive value. They're trading like deep discount value stocks, but they have like 20, 30% forecasted growth rates. And they have great balance sheets. So MGA and MU are like two of my favorite. Sock away, buy, forget about them for 5 years, 10 years, and you'll probably end up doing really, really well. So
I like it.
Right.
We talked about those this morning. I know that we'll talk about this more in Equities on Demand this week, Tyson, but we keep talking about all these great stocks, healthy stocks. I used one of my scanners from Simply Wall Street and just found really, it's interesting. I just did a pure value play because you and I have talked about this. Look, we're clearly seeing like a little bit more of accelerated sell-off in tech. So, Facebook has been dropping. Microsoft is finally coming down. Apple is coming down. Amazon's coming down. Netflix is peaked out, starting to sell off a little bit. So tech, just like we saw with the just insane concentration in so few stocks, if tech is dropping, it will bring the entire market with it. So as tech is correcting, we are starting to notice this transfer from, low interest borrowing, R&D, put money back into your company and spend it like crazy like tech typically does, to potentially reining that in. Interest rates go up, blue chips, dividend stocks, value stocks, infrastructure stocks start to get maybe a little bit of the nod for better growth in the next maybe 12 to 24 months. One thing really quickly, Tyson, I know that you and I have a class today on our sector sniper strategy, which is just focused on credit spreads. Can you spend like 2 or 3 minutes talking about the kind of the 0 to 7 year sector rotation stuff that you talk about in that class?
Yeah, good. This is really valuable stuff. I got to tell you, we're actually going to talk a little bit about this in the session today too. But really, so real fast, a definition of a recession, like we just went over, is two consecutive quarters a decline in gross domestic product. So once we go into recession, that's easy to indicate. Okay, so now we're officially in a recession. 2 consecutive quarters of declining gross domestic product. But it's the key is how do we forecast when we're coming out of recession? So many analysts and so many people they time it wrong. So here's kind of the indication that I use. Look at the jobs number and look at retail sales, because we need those two things. It's going to take the people getting to work and people spending that money to get us out of a recession. So when we get 2 consecutive months of increase in jobs number, not the unemployment rate, but the actual jobs number. When those, I don't care if it goes from, we created 5,000 jobs to 5,200 jobs to 5,300 jobs, 2 months in a row that are higher, the consecutive, and then 2 months higher in retail sales. That's the first kind of key indication we're coming out of a recession. Now, the reason this is important is because when that happens, we reset this kind of 7-year trend. And I'll just give you guys kind of just the quick version of it. There's something called risk on, risk off. It happens in the currency markets, and it happens in sector rotation. If you're going to be let's say that we're coming out of a recession, we just got the second month of retail sales and jobs numbers right now. What we want to do is we want to start to go in what's called consumer discretionary. That's when the consumer, you and I, your next door neighbors, we're going to start to feel better. The headlines are going to start to look better than they did a couple months ago because things are starting to pick up a little bit. We want to go into discretionary stocks such as, I'll give you like a portfolio. Right away, you buy Nike. You hold Nike for anywhere from 1 to 2 years. This is just as an example because people are excited. I want to go to the club. I want to do this. I want to buy my Nike. You buy Nike, you hold it for 1 to 2 years. After 1 to 2 years, what happens is interest rates are still low, but people are starting to hear a little bit rumblings of interest rates maybe going up because the economy's starting to get better. You sell your Nike and you go into something like D.R. Horton because now you're going to get a big flood into home buyers, right? Because they want to get into the market and buy before the rates go up. So year 1 to 2, you buy Nike. Year 3 and 4, you buy D.R. Horton, DHI. After year 3 and 4, that's when the rates that's when we really start to get rumblings that the rates are going up. That's when money starts to flood into financials because financial markets, financial companies like Goldman Sachs and Wells Fargo, they do really, really well when rates go up because they earn more money. They get more margin. And so what we want to do is we want to get into those before that big rally happens. So year 4 and 5, we go into financials such as, let's say, Goldman Sachs or Wells Fargo. And then late into the cycle, 5 and 6, when we get into about the 6th year of the cycle, forget all getting the upside, go to safety, start going into more consumer staples because these cycles typically last anywhere from 4 to 7, 9 years at the longest, really. You want to go out of your banks and into something like Procter & Gamble or Walmart. So the way it works is this. We'll say it 2-year increments. You go Nike, D.R. Horton, Goldman Sachs, Procter & Gamble. Wait for the recession to hit. Wait for those signs that were coming out of the recession and restart Nike, D.R. Horton, Goldman Sachs, Procter & Gamble. You do that, and I'm going to tell you, you're probably going to substantially, I can't guarantee it, but that portfolio right there, I would be shocked if it didn't handily beat the market and lose much more when the market goes down. That right there is probably a master's degree in economic in sector rotation right there, by the way.
You meant lose much less, Tyson? When the
I'm sorry, lose much less. Sorry about that. Yes. Yeah. So I want people to understand you're still going to lose money in a down market because you're in stock, you're buying stocks. But the idea is this. Yeah, if the market goes down 30%, I want my portfolio to go down 15 or 20 or 22% less than the market. And if the market goes up 22%, I want my portfolio to go up 38%. That's what we're trying to do. We're trying to outperform in good times and lose less in bad times.
Yep.
All right, makes sense. Absolutely makes sense. So let's go ahead and move on to, we got a few more minutes right here, but let's go talk about cryptos. I think cryptos are at a good spot right now. I know, Tyson, you've got your own portfolio that you're looking at. Chris, you've got yours. And I'm looking at a couple of things as well, but let's go take a look at a couple of cryptos. And I'm going to go ahead and flip over to the Gecko chart right here. Take a look over here. This is what we've got going. I'm going to go ahead and just update this because we did see a downside move in the market cap. We can see Bitcoin's definitely taking a little bit of a dip, but it's gone back up to that 48,000 again. But if we take a look over here in the opportunities, I look at this and I see that we had a great opportunity on Friday. Early Friday morning, we had a good, strong rally on most of the cryptos. The altcoins weren't following. Friday morning was a good opportunity to grab some altcoin buys. But we've had now, over the weekend, we've had some correction moves on some of the altcoins. If we take a look over here on the chart again, we can see that in the last 24 hours, there's a bunch of these. Solana's down at 3.3% over the last 24 hours. We've got XRP that's down, Ripple, which is 2.9%. I look at these, and Avalanche is down 4.4%. I look at these as opportunities. These are like the correction moves. And I know that you've spoken about Litecoin as well, Tyson. Litecoin is at down 3% over the last 24 hours. But what I look at is the 7-day. The 7-day shows me that the trend is strong right here. So we see that Litecoin's up on a strong trend. So which means that if you jump into Litecoin, you're just going to buy on some small corrections. And the correction right now is at down 3% on price. So if we look at there was I think there was another one that was down quite a bit. Or was that the one? I think it was Avalanche. But then you've got your I think it was Avalanche. But if you go over here now, let's go take a couple of these. It was Avalanche. It was Avalanche. Yep, 4.4%. So if we take a look at these cryptos right here, a lot of opportunity for those that have not got in to still take a bit of a rally in these coins. The question here is, Tyson and Chris, is where do these guys get in? Where do you get in? Because if I go to Bitcoin chart and take a look at the Bitcoin chart right here, take a look at what we've got set up right here. There we go. So if I take a look at Bitcoin chart, this is what we got going here. We have this this rally that's taking place. This was happened on Friday morning. Market over the weekend stalled a little bit, but take a look right now. We're starting to blow up. We're at 49 already. The next upside target, we spoke about this in the trading room, is here around about 57,000 right here. Now we're going to get a little stall here as you get to the previous high, and the market's going to stall there. But if we blow through there, 57,000 is the next level. My prediction, and Chris and Tyson, I want you to comment on this, but my prediction is this: is once we hit 57,000, I'm going to be very cautious on any altcoins. In fact, I may still hold on Bitcoin, I may still hold on Ethereum, but coming to the altcoins, I may go ahead, because the altcoins is what's going to give us the biggest value for our buck going north on Bitcoin. But when we start seeing Bitcoin coming down, altcoins are going to fall the fastest. And so I want to go ahead and start cashing out of the altcoins. All the altcoins that are built up, I'm going to cash out of them, put them into dollar, wait for any correction move, and when we see these deep correction moves, then go buy back into Bitcoin, Ethereum, those solid Litecoin, those type of coins at that point. What do you guys think about the movement that we're having right now in cryptos?
Yeah, I agree. I'll tell you though, Gary, I'm actually starting to think that we're at a time where you don't want to play that many games. I don't know if I'm going to be able to time the next explosion move as well as I think I can. You know what I'm saying? And so I don't want to miss the next move. I think the next move's taking us to 150. And I think the next move that takes us to 150 on Bitcoin, I think it doubles, triples, quadruples a lot of the good altcoins also. And so for me, it's, if you're going to try to get out at that peak high in Bitcoin and kind of play the game, I don't think you should get out of your entire position. Get out of some of it and look to buy back lower, but you got to have some exposure because you're not going to want to miss this next rocket ship higher. And I know that some people would say, well, what if it falls further? Keep some dry powder and buy more, especially if you're a believer like I am long term. I'm just continuing to buy more. I like, I do think we could dip down. However, in the crypto series that we launched today, we started buying our 8 top coins. I've one of those top coins, I've been beating the drum on this for a while, is Litecoin. And so I'm going to just continue to own Litecoin, have some exposure in it. I'm going to try not to play the game or get cute, because I think those that, I will say this, I'm going to end with this. I think those that try to get cute with crypto will make a bunch of money in the next 10 years, but you'll make about 1/10 of the person who didn't get cute.
Yeah, the thing here is that when you say play cute, I'm assuming that you might get in and out,
Just in and out, because
Right.
it's difficult. Yeah. And I'm not saying we can't do it, but it is
look at this.
difficult.
Well, think about it this way, Gary. Imagine, this would be the difference of like the mindset. Like, imagine having the patience to just wait for 2 to 3 years, 3 to 5 years. Like, who do you think outperforms? And again, part of it's because, like, if we're having a directional bias on cryptos, I think the three of us would agree that our directional bias is bullish. Longer term, we're trying to get as much as we can out of these buy levels. And, we can be in and out and in and out. And I know in theory, it's like, well, if let's say that Bitcoin goes from, right now at 48,000 all the way up to 250,000. Well, there's going to be ways to trade that. But when we saw it go from 3,000 to 20,000 and 10,000 to 60,000, unless you were literally just adding at highs, there wasn't a lot of dips to buy. So I mean, I understand that we can flush back down to 30, maybe test 20. We can go up to 55 or 57. But I mean, I'm more excited about once we break 65 again, where do we go from there? 100, 125, 150? And I mean, you're going to be happy that you've been holding something at these current levels. So that, I mean, it's just, I'm not pressing to like churn and transact with especially holding Coinbase, because they charge an arm and a leg for these trades. So I'm more like, I want to buy levels I want to own at and wait for, the next 12 to 24 months and see when we blow through these highs and every coin you've ever been holding is just killing it. And it's just a matter of how well can I hang on to those gains. So, yeah. It's, I think for the trader that wants the money now, it's easier to play the game and you trade. For the investor that is speculating, you hold. And you're just willing to put more money into it when you have it, and you look to buy opportunities that you're like, I like this level, I'm going to put more in, and you cost average.
But you got to realize that there's a lot of traders that are out there, or investors out there, that didn't get in when the coins were as low as like Bitcoin. They didn't get in when Bitcoin was $300-400. They didn't get in with Ethereum when it was down to $120, $150. So and this happens, and why am I saying this? Because my son Cameron, he got into cryptos a little late, but what he's managed to do, and this is what I'm really advocating, is those investors that haven't got big portfolios, they want to build up their portfolio instead of putting more money into it. They've got to go ahead and trade this in and out, and that's how you build your portfolio. See, I do agree. Yeah, you want to hold Bitcoin, you want to hold Ethereum, you want to hold Litecoin. I'm not a big holder of Litecoin, but I do have a lot in there. But you want to hold these major coins. But the thing is here is, how do you build up your portfolio with still putting more money? Now, I agree. Every time the market dips, you want to go ahead and put more money in. But some people don't have additional money to put in. So what do you do is this. When the markets go up, I'm talking specifically the altcoins, right? When the markets go up, altcoins, you can make good returns. You can make 10x, 20x on altcoins. Build up that portfolio. Then you go ahead and withdraw, and you're holding still the majors. And I'm calling them majors. You're holding altcoins, not altcoins, the Ethereum, Bitcoin. But these altcoins is where you're generating additional coins to buy back into the Ethereums, into the Bitcoins. And so you build up your portfolio like that. So when we do have these blowouts, you're still holding the bigger coins, altcoins, there I go, altcoins, Ethereum and Bitcoin. But then every time we're having these dips, it's new opportunities to reinvest to build up a portfolio. That's really what it is. And so he's managed to, just to bring back to Cameron again, he's managed to quadruple his portfolio without putting more money in. And that's the difference between.
Let me ask you this, Gary.
Trading
I think that's phenomenal. So I just want to be clear. From the sounds of it, what you're doing is you always have exposure, but you're going Bitcoin. Now it's time to go into alts. You go into alts, get out of alts, go back into Bitcoin.
Absolutely.
What I'm not a fan of, guys, and I'll tell you this just from my own experience, I'm not a fan of alts. Oh, we got overbought, cash. And then alts again, because here's the deal. I have coins, true story. I have coins that I started buying at 7 cents. They went up to 14. I sold out. All right, I'm going to buy back more. It went back down to 2 cents or something like that. Goes up to 3 cents. And okay, I'm going to get back out because I'm a little bearish. Thing sits there at 3 cents, explodes up to 14 cents, and I miss the move. I'm in cash. It's happened to me at least 3 or 4 times, and I'm unwilling to miss those moves again.
I'll second that.
If I would have, instead of going into cash, if I would have went to Bitcoin, that would have been a good play. So I like the way you're doing it.
Yeah.
So the thing here is what you always want to do is you always want to add to your main portfolio. So you always want to be holding altcoins, but you want to be cashing out when you're making 10x, 20x on altcoins. It's time to take profit, because these altcoins can live and die within a day, within 2 weeks, within 3 weeks, within a month. It's not always going to be there. So we want to make as much as we can on the altcoins while they're generating X amount of profits. But what we also want to do is we want to maintain our portfolio and just build up. It's like what you do in the stocks here, Chris. You just keep building up your portfolio in stocks and growing your portfolio. What are you doing? getting in and out of stocks, building up your portfolio. So your portfolio goes from 10,000 to 50,000 to 100,000, and you do that by chasing after those big profit stocks that you can go ahead and add back to the portfolio. And that's no different. Holding on to Ethereum, holding on to Bitcoin, I believe, yes, long term, I'm a big believer on an altcoin, on Bitcoin and Ethereum going to the highest levels. But I do want to make sure that I can build up my portfolio without putting more risk of my own capital back in it. And that's the only way to do it.
Love it. I think
you've got to learn to take profits, man. You know, you've got to learn to take profits.
So you're going, okay, it's altcoin season. Let's go into Cardano, ride the wave higher. Oh, that altcoin season's done. I'm going to go back into Ethereum and Bitcoin. So you're treating Ethereum and Bitcoin kind of as the stable coin, which is exactly, I love that idea. I think that's a phenomenal plan.
Yep, that is. All right, well, good. Well, there's a lot of options out there. Make sure you get into Chris Tyson and myself. Get into our trading rooms if you haven't already. Go and contact your account rep. Speak to them, your education specialist. Speak to them about getting into the trading rooms, because we do talk about these different coins. And we have to keep talking about them every single day because it's out there, it's there, there's good money to be made. So stocks, options, and cryptos are conversation, or this topic of conversation in the trading session. Another thing as well, I forgot to remind you guys again, if you have not subscribed to the channel, please make sure you do that. Subscribe to the channel. Chris and Tyson and myself, we talk about some great stuff here in this channel. And if you're not a subscriber, you're not going to get to know when we go live, and you need to go ahead and subscribe. So please go ahead and subscribe to the channel, but also smash the like button. That's the way we can get this video out to as many people as possible, and we'd like to do it. So show the support for this trading room, and go, well, at least this channel, and go ahead and smash the like button. We'd really appreciate that. Chris and Tyson, I know Tyson, you got something to say.
Yeah, another idea too. Listen, another way we fool the behemoth YouTube and Google is add some things to the chat about, throw out some stocks, some different things, some currencies, some things that you're looking at. Everybody chat out there, everybody reply out there, and the people are gonna be like, wow, these guys are amazing. And you know what? Next week, let's if you type in your symbols, if you type in what you like, you type in some questions, we'll pull some of those up from this week, and we'll see if we can answer some of your questions.
Yeah, that's actually a brilliant idea. Yeah, post any questions, any stocks, any cryptos, any currencies that you want us to go ahead and review. Go ahead and post it, and we'll grab this information and talk about it next week in our next session. So that's great. Chris, I want to give you the opportunity to close up the session today.
Yeah, look, it's a busy week. I know Tyson and I kind of kicked things off this week with Equities on Demand. You know, we run that room Monday through Friday. I posted a link inside the chat for all of our different trading rooms. We've got, Gary's room, my room. We're trading Forex, we're trading stocks, we're trading cryptos. So we've got, asset classes for everybody. But I just want to say that, look, the forecasted correction we're seeing in the stock market is weighing in currencies. We're seeing a little bit of risk off flows right now. This could be a bit of a management week. It's going to be an interesting first full week of Q4. Are we going to see central banks start to change their narrative? Are we going to start to see a decent job number? Will the Fed? It's like the inevitability of having to raise rates. We saw a big jump in the 10-year yields. So look, things are going to have to change, and this is why we're starting to see a correction. I'm all for, this 10-15% correction in major indices, which allows us to buy great stocks at lower prices. I'm trying not to be overly speculative in stocks. I'm trading the technicals, of course, in Forex, but it's just like anything else. Follow the technicals, take good trades, quality over quantity, and just keep grinding. Like there's a lot of weird stuff swirling around, but don't get caught up in the fundamentals. Don't get caught up in all the drama. Just keep trading, stick to the charts and the technicals.
All right, appreciate that, Chris. That's it from us. We do appreciate you guys being here. We will see you back next week, same place, same time, and we're definitely going to have more conversations about what we spoke about today. Just go ahead and make sure that you post those chats. Go ahead and comment in the chat. We'll go ahead and address them in next week's session. With that being said, this is Chris, Tyson, and myself wishing you peace, joy, and successful trading. Until next time, happy trading.